we've been kind of addicted to Federal Reserve quantitative easing for a long period of time, right? So the market has not really experienced a recession in basically almost, 15 years. And what that does is it makes the market not know how to deal with a slowdown without Federal Reserve printing. And so my fear is that as we see the economy slow down due to higher interest rates, and we now have the Fed funds rate around 5%, you're going to start to see a recession kicking in probably in the second half of this year.
At InTheMoneyStocks.com, Gareth Soloway serves as the president's chief financial officer and market strategist. The well-known technical analyst, who has over 20 years of expertise in the industry, has traded a variety of bull and bear markets, stocks, bonds, commodities, and cryptocurrencies. Soloway has actively cautioned traders and investors about macro headwinds and how they may affect a variety of asset classes, including equities, cryptocurrencies, and commodities, throughout the course of the past year. Soloway recently spoke with the Liberty and Finance YouTube channel on his macro outlook for 2023, focusing in particular on what he anticipates from the U.S. Federal Reserve in the upcoming months. The prospect of a prolonged recession, which may have a negative influence on economic output, employment, and asset prices for several months, is one of many macro risks that the U.S. economy will face in 2023, according to Soloway. According to Soloway, the market is accustomed to the Fed's routine bailout, which may not be as forthcoming this time. The well-known expert also talked about his forecasts for Bitcoin. Soloway has been largely pessimistic about the top cryptocurrency since it reached its current all-time high in November 2021. But his days of being negative about the cryptocurrency asset might be quickly coming to an end. The well-known technical analyst said that he was long-term positive on Bitcoin in his interview and forecast that the cryptocurrency would reach a bear market bottom in the upcoming months. Please take a moment to like this video, subscribe to the channel, and enable post alerts before we listen to Gareth Soloway's macro and Bitcoin outlook for 2023 so you never miss one of our regular uploads. Be sure to add your thoughts and observations in the section below the video. Whatever you do really aids the channel's growth and helps the YouTube algorithm. Have fun with the video.
You're going to start to see a recession kicking in probably in the second half of this year. And the kicker is going to be that inflation is unlikely to get back below 2%. It might get close. It may be 3%, 2.5%. But if the Fed won't come out and print right away, how does the market, how does the economy find its way out of a recession? It doesn't know how to anymore. In fact, you could argue that the Fed has broken the underlying ability for the economy to get out of a recession. So I think that's where I'm looking at it from that kind of vantage point. And I do think that that's the likely scenario here. We're facing, it's not going to be like a depression. I don't foresee that in the next couple of years. It's more like going to be a tough economy that's going to last for years.
Now, you're saying years, do you think like 5 or 10 years, or what is the time frame on this?
That's super hard. I mean, my guess is it's going to be at least 2 to 3 years. And then my guess is the economy will start to get worse and worse, which will then force the hand of the Fed. So even if we're at, let's say, 2.5% inflation, if you all of a sudden see 10% unemployment, the Fed will feel forced to act at that point, and then you'll get some sort of stimulus going again. The only problem is it starts the merry-go-round again, where you have then higher inflation coming in over the next few years. So, I mean, this is one of those things where it's like a drug addict. When you get addicted to it, it's very hard to get off the juice, if you will. And that's what the economy's facing now.
What is your outlook for cryptocurrencies going forward? And are you still bullish on them?
Yeah, so long term, I'm still very bullish. And again, important to recognize that I'm bullish on Ethereum and Bitcoin. I'm undecided on ones like Solana and Cardano. I do think they'll probably survive, but it's hard to gauge exactly how they do in the longer term. But I do think, for instance, Bitcoin longer term, very, very bullish still. Now, in the near term, though, it's important to recognize that I still see further downside. So I've been a bear since 69,000. There's bounces along the way. We've seen one of the great bear market rallies here. But what we can see here is you almost have that same M top that formed when we were at the all-time highs. Like if we go back to this chart, look at that same sort of chart pattern, which is exactly what we just created on a very smaller scale. So the question now is, we had a bear flag here, it broke down, and now we're making another bear flag, and my guess is we are headed back to 18,000 and change probably in the next month or so. So I do think you have downside on it. I still have a lower target. I still don't think Bitcoin has fully bottomed out in this cycle. And I still think that, again, too many people are bullish on Bitcoin and crypto. Like, as soon as it pops, a million people come out on Twitter all like, this is the new bull cycle. Bear markets, if you look back at 99 to 2000, when the bull market ended in dot-coms, or in 2007, when the bear markets followed and finally ended, no one dared be bullish. And that's not happening in crypto yet. People are still too eager to jump on the bull bandwagon. So for me, that's a dead-on signal to be really careful with crypto over the next couple months, as we could see lower lows. In a weird way, I actually view it as a positive. I know that sounds super weird, that FTX's collapse could be a longer-term positive for Bitcoin, but I think it spurred the onset of regulation that's coming a lot faster. I think if FTX didn't happen, if Celsius didn't happen, if you had nothing going on shady in crypto, then there'd be less push to regulate it, because investors in crypto wouldn't be up in arms that they're losing money left and right. And I think ultimately, for the health of cryptocurrency and the sector, you have to have transparency and regulation and all these things. So in a weird way, it's almost like a longer term positive, even though it causes short term pain.
No, that's very good. And I guess before we let you go, what are if you want to reiterate for our viewers, kind of your general outlook for the economy, and what are some of the main things that people should be paying attention to who are invested in the markets right now?
Yeah, so definitely this Friday, the jobs report, that's going to be the big economic data point. And then I think it's on March 22nd or so, we have the Federal Reserve next meeting on interest rates. I'm expecting a 25 basis point hike, not a 50 basis point hike, but I think they'll continue with their 25s. And then really the market will be gauging what Jerome Powell says and his guidance going forward. I think that's the key right now. Everyone's focusing on the Fed. When do they halt their hikes? When do they kind of, move their stuff? And then obviously economic data, mainly CPI, PPI numbers, as well as the jobs data this Friday are going to be absolutely huge. So in general, I remain overall net bearish on the markets. I have more shorts out there than I have longs right now. But again, be aware that markets and bear markets can be very volatile, but I am overall short the market. Yeah, so I am in the camp that I do see significant downside from here. I think that investors are there's these phases when a bull market ends in the preliminary portions of a bear market where investors get very excited because they remember the good times, right? And the good times were Dogecoin and SHIB going up, hundreds of X times, maybe more, and like, AMC and GameStop and all these other ones, right? So you have these interim periods in markets where people say, oh, well, maybe we're going to get back to that. Let's buy everything that was running during that period. And you'll see those stocks pop. And we have seen that quite a bit. My bigger issue is, even though we've closed above this trend line, right? So this is a trend line that goes all the way from the all-time highs on the S&P, and you have had a bounce off of that. My bigger issue remains that we haven't even retested the pre-COVID highs here. And again, if we look at what's holding this market up, so you have the hope that the Fed pauses, but even if the Fed pauses, they're not going to lower interest rates anytime soon. Powell's made that super clear that he doesn't want to repeat the mistakes of Paul Volcker back in the 80s. So you have long-term interest rates staying probably elevated for a significant amount of time until the economy starts to go into a recession, which is kind of, you could argue that the Fed wants that. I mean, essentially they've said they want that. So if we go into a recession, you're going to see an earnings recession. And if that happens, then valuations are still way, way too high here. So at some point, I do see another collapse back down. Target for me on the S&P, first target would be this 3380 level. And then eventually, I think you have to go back to this long-term trend line, right? So if we go to the weekly chart, there's this long-term trend line that goes back to the lows in 2009 when we came out of the Great Recession. And that trend line hasn't been tagged in the longest period, right? So if we look at this trend line, there was a little bit of a gap here. This was about 3 years. Then it was about 4 years or so here. And then another kind of dip of about 3 years. And then really just between then and COVID, it was only a year to 2 years. We've now haven't tested this trend line since 2020, right? So we're now getting to the longer end of that. In addition, we were so far above it, it makes me almost feel like we almost need to even go below that. So I won't go to that extent and say, hey, we're definitely going below that long-term trend line. But I think the 3,000 level It's a round number. It's got to be where we're headed back to. Especially over the last week, we've seen these big candles to the green side, then the next day red, green, looks like a Christmas tree almost. But I think the key is we did hit resistance on the dollar here, and it looks to me like the dollar's trying to curl over and come back in. Now, even if we do fall, there's not a lot of downside. 103.60 is going to be some good support. But again, whether it goes up or down near term, the longer, bigger picture remains bearish for me. I think that you're going to look back on this, and we'll all look back on these dollar highs and say that that was a long-term pivot high on the dollar, mainly because I think that, again, as the economy starts to weaken, you're going to see interest rates, long-term interest rates starting to come in just a little bit, short-term as well, and the dollar will weaken as well, assuming that there will be a point in the future where the Fed does have to print again, which is dilutive to the US dollar. So again, for me, we're very close to the end of the rate hike policy cycle. It's just more of an issue that I don't see the Fed lowering rates, at least for the next 6 to 12 months. And I think that's going to be problematic for the economy, but the dollar should start to lower itself based on that.
What do you think about Gareth Soloway's forecasts for the US economy in the near future? Do you concur that you could soon enter a recession that could last a few years and require the Federal Reserve to restart printing money? Please post any thoughts, observations, or predictions in the space below. Moreover, make sure you enjoy this video, subscribe to the channel, and enable post alerts so you won't miss any of our upcoming content. I appreciate you watching.